Just imagine if you'd found this 20 years ago. How much interest would you have saved? How much faster would you be mortgage free? How much wealthier would you be today as a result of this loan? Hi, I'm Mike Wise from Mortgage Wise, and today we're celebrating something that is very rare in the mortgage world, a loan product that's lasted 20 years. That's right, the all-in-one loan. This isn't a trend, it's not a gimmick. It's a proven, powerful financial tool that has helped thousands of borrowers take control of their mortgage, their money, and their future since 2005. Let's go back in time. 2005, the year YouTube was launched. Housing prices, they were booming, and interest-only loans, they were being handed out like candy. CMG, on the other hand, they launched something radical, a first lien line of credit that merged your mortgage with your checking account. Why? Because they believed there was a smarter way to help people pay off their homes. Well, what happened next? The 2008 housing crash. Most mortgage products, they vanished or they left people trapped or stranded. But the all-in-one loan, it kept working because borrowers weren't locked into fixed payments. They had access to their liquidity. And most importantly, they had control. Let's be real. Since 2005, we've seen the subprime mortgage meltdown, the Great Recession, historic low interest rates, a global pandemic, unprecedented inflation, and a spike in the Fed rates to curb that inflation. Through all of that, the all-in-one loan kept saving borrowers money. From 2018 to 2025, the all-in-one loan's average interest rate, it ranged from the mid-4s to the mid-8s, but still allowing borrowers to reduce their principal faster and retain access to funds. No refinancing required, no restarting the 30-year clock, no throwing extra cash into a mortgage prison that you can't touch. This loan is recast daily, so your interest adjusts automatically as your balance drops. Every deposit goes to work for you immediately. Look, here's a case study. A couple in San Diego, they bought a $1.5 million home with a $1.2 million all-in-one loan. They had a $100,000 emergency fund that they used with this. And with the all-in-one loan, they paid off their mortgage in 11 and a half years, not 30. They saved over $1 million in interest, and they still had access to all of their emergency fund and more. Look, that's not hypothetical, that's real, a real-life customer. Thousands of borrowers across the United States have used the all-in-one loan to pay down their homes faster, reduce risk, and grow wealth. What made it work? Incentives. As Charlie Munger said, show me the incentive and I'll show you the outcome. So traditional mortgages, they reward you for paying slowly. The all-in-one loan flips that. The more you pay down, the smaller your daily interest. The smaller your interest, the faster you build equity. And unlike a 30-year loan, you can still access your money if you need it. Just imagine if you'd had this loan since 2005. How much further along would you be in your financial journey? Just imagine you weren't locked into a mortgage that punishes you for trying to pay early. Just imagine if you could tell your kids one day that your mortgage didn't own you, you owned it. So here we are. 20 years later, the all-in-one loan is still delivering for borrowers. It's built for flexibility. It's engineered for savings. It's proven by results. If you're ready to rethink how to manage your largest financial obligation, this is the time. Don't wait another 20 years to find out what you could have saved. Click on the link below for a free 30-minute consultation and receive $250 towards your closing costs when you fund your loan through me. If you found this helpful, like the video, subscribe to the channel Mortgage Wise, and share this with somebody who might need a smarter mortgage.